Stocks on Wall Street closed lower on Friday amid tariff threats. Asian markets opened with cuts after US announced tariffs on the European Union and Mexico. The GIFT Nifty also indicates a tepid start. In a fresh round of tariff letters, US President Donald Trump announces 30% tariffs on goods from the European Union and Mexico, which will take effect from August 1st. The European Commission President said the EU will take necessary steps to safeguard the interests of the European Union. Oil prices edge higher, adding to Friday's gains as investors eye further US sanctions on Russia. Meanwhile, gold prices remain steady amid trade worries. IT major HCL Tech will come out with its first quarter numbers today. The company is set to report weakest growth amongst peers, while margin is expected to dip despite no wage hike. And CNBC TV 18 Newsbreak confirmed as multiples PE and Mithun Sancheti come together to acquire 32% stake in VIP Industries held by promoters. The buyers will also make a mandatory open offer for an additional 26% stake in the company. Well, good morning from the Mumbai News Center. I am Vamakshi Thoria and you're watching Power Breakfast on CNBC TV 18. First up, let's take a look at what the Asian markets are doing. Well, to begin with, the handover that came in from the US markets was not all that great, and we'll talk about that in a little bit more detail. But for now, there are jitters across some Asian markets like Japan, which have experienced, which have received rather some tariff letters from the US administration. The Japanese markets for now are down almost 0.4%. But what's leading the declines is the Taiwanese market. Take a look. That index is also down and out in trade today. Apart from that, the Hang Seng is rather flat but trading with a negative bias. Shanghai, on the other hand, is trading with a gain of almost 0.5%. The Kospi, though, the South Korean index, doing quite well despite receiving the tariff letter from President Donald Trump. Now, let's also take a look at what happened in the US markets then. Wall Street ended Friday's trading session lower after US President Donald Trump announced a 35% tariff on Canada and threatened higher tariffs across the board. The Dow loses more than 270 points, while the S&P 500 shed 20 points. The tech-heavy index, the Nasdaq, also lost 45 points. Friday's losses pushed the major averages into the red for the week. CNBC's Angelica Peebles gets us a wrap of all the action on Wall Street.
U.S. markets were down across the major indexes in Friday trading, a day after President Trump escalated trade battles with new tariff threats. The Dow lost 279, the S&P 500 down 21, and the tech-heavy Nasdaq tumbling 45. Bitcoin reached all-time highs overnight into Friday, crossing 118,000, thanks to institutions buying into Bitcoin ETFs. According to crypto investment research firm SoSoValue, Bitcoin ETFs had their best day of inflows of the year Thursday at nearly $1.2 billion. Investors have been expecting Bitcoin to break records in the second half of the year as corporate treasuries accelerate their buying spree and Congress gets closer to passing crypto regulation. And the Treasury Department on Friday posted an unexpected surplus in June as tariff receipts surged. The surplus of more than $27 billion followed a $316 billion deficit in May. The June receipts bring the fiscal year-to-date deficit to $1.34 trillion, up 5% from a year ago. But with calendar adjustments, the deficit actually edged lower by 1%. That's what's happening here in the U.S. Back to you in Mumbai.
Well, thank you so much for that, Angelica. And the U.S. equity futures continue to slide as Wall Street contends with continued tariff risk and second quarter earnings on deck. On Saturday, President Donald Trump said the U.S. will impose 30% tariffs on the European Union and Mexico starting August 1st. Leaders of the EU and Mexico indicated that they intend to keep talking with the Trump administration this month in an attempt to agree on a lower rate. As of 7:15 a.m., S&P futures fell 30 points, while Nasdaq 100 futures dropped 0.5%. Futures for the Dow Jones Industrial Average were down 207 points. Well, as investors assess Trump's tariff threats, the U.S. President Donald Trump told reporters that revenue from tariffs will reach extremely strong levels in about a month. Let's listen in.
Our country made $25 billion last month, $45 billion. It hasn't done that in a long time, and a lot of that's done because of good management, and number one, and maybe even more importantly, the tariffs that are pouring in. We have tariffs pouring in at levels that we have never seen before, and they've only just started. That's really a small portion. It's mostly from cars and aluminum and steel, a little bit of lumber. But they'll really start in about another week. And then in about a month, they'll come in at levels that are extremely strong. We're dealing with other countries, and certain countries that would rather have a deal than a regular tariff. And we're willing, if they're willing to open up. These are countries that have been shut to us, but we've been open to them. In other words, they wouldn't let us do business there, but they would do business in our country. Not a fair deal. So the European Union is talking to us. They want to open up their country. I would say Japan to a much lesser extent.
While staying with the Wall Street, then let's also listen to what Urian Timmer of Fidelity Investments had to say on the U.S. market impact from Trump's tariff salvo.
I think the markets are taking a wait-and-see attitude after the back and forth lurching of the headlines back in April. We got earnings season, of course, coming up next week. So I think there's a good chance that the earnings numbers will actually start to come back up again. And I think the market is pricing that in at a 23 multiple. So I think the market's in good shape. The breadth numbers are good, above the 200-day moving average, about 65%. So I think the overall health of the market is pretty good, and industrials and financials and consumer stocks are joining in with tech and communication services. Even global markets are at a new high, so it's a good situation. The downside, of course, is that if we do actually get the tariffs that were warned back in April and then were taken off the table a few weeks later, that could depress profit margins or increase consumer prices to some degree. I think this is why the Fed is on hold, which in my view is the right thing to do.
Well, that's all the global market action we have now. But how will all of these overnight cues impact our Indian market? We now have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. Let me first start off with how the trade setup looks like. Well, the markets in India continue to slip for the second straight week. Both the sensex as well as the Nifty are down almost 1% each last week. Keep in mind that the previous week started off with hopes on a mini trade deal between the India and the US, but there has been no clarity yet. That does reflect on the kind of caution we're seeing in the Indian markets. IT has been the biggest drag on Nifty last week. Take a look at HCL Tech, TCS and Wipro. They were among the top losers. On the flip side, what did well was the FMCG index. It was in fact the only sectoral index which was in the green. Now, when we look at the broader markets, they continue to underperform the benchmark indices. The Nifty mid-cap as well as Nifty small-cap fell somewhere around 1.5% last week. And the losses were actually led by some capital market plays, which included BSE and MCX, which were the top mid-cap losers. Now, as far as this week's session and today's session is concerned, as far as economic cues are concerned, we'll be watching out for India's WPI and CPI data, which will come today. Later this week, we'll also be keeping an eye out on China's GDP, India's trade balance data, as well as the US core CPI and PPI data. Now, today's news flow will largely be dominated by numbers. Results, we're keeping an eye out on HCL Tech, Tata Technologies, Ola Electric, Rallis India, as well as Tejas Networks. There's also a new listing lined up today. Travel Food Services will make it to the Lal Street, so we'll be watching out for that. And a new IPO opens. Anthem Biosciences will be launching its 3,395 crore IPO. Important levels on the downside, the support comes in at 25,000. On the upside, 25,350 could be a resistance. Let's take a look at what the GIFT Nifty is indicating. It'll come up for you on the screen in just a bit. It's indicating a negative start, down almost 43 points. But then let's also focus in on the stocks that will be in focus today. Ria is here to take us through that. Ria.
Good morning, ma'am. Actually, let's take a look at the stocks that are going to be in focus today. First up, VIP Industries to be in focus since the promoters are set to sell a 32% stake in the company at a price of rupees 388 per share. Apart from this, going on to the Q1 numbers and the business updates. For Avenue Supermarts, the net profit has been largely stable at 773 crores in this quarter. and the revenue has been seen going up by around 16.3% compared to the previous year. For Sula Vineyards, they've come out with their Q1 business update. Net revenue has been seen going down by around 7.9% over the previous year. For all cargo terminals, the June CFS volumes are down about 4.5% month on month. Going on to Ajmera Realty for the Q1 update as well, the sales value has declined by around 65% on a year-on-year basis, but if you look at the collections, those have gone up by around 42%. For Kolte Patil developers as well, the collections have been seen going up by around 10% compared on a year-on-year basis. And for IRB Infra, the June toll collections have gone up by around 5% compared to the previous year. Moving on from these three pharma stocks will be in focus today. First up is Gland Pharma. They've received the GMP compliance certificate from the Danish medicines agency. For Wockhardt, they have exited the US generics business, which had been loss-making for the past several years, and the focus will now shift to the innovative portfolio of the company. For Glenmark Pharma, they have received a warning letter from the US FDA for its Indore facility. So all three of these stocks will be in focus. Two other stocks to keep on your radar. NCC has bagged a contract from MMRDA worth about rupees 2,269 crores for the Mumbai Metro Line 6. And the last one is Akzo Nobel. JSW Paints has launched a 3,929 crore open offer to acquire up to 25.2% stake in the company.
Thanks for that, Riya. And finally, we now have Mangalam joining in with cues from the F&O space. Monday blues for the market, Mangalam?
Monday blues for the market, but it was more of an extension of the Friday blues that we saw. If you look at it, on Friday, we saw a sharp gash on the frontline indices, and this despite the Nifty Bank not falling as much. In fact, the Nifty Bank was an outperformer on that trading session. It was led lower by the IT stocks. The broader markets, while the mid-cap index fell in line with the front line, the advanced decline tells you that there were way more number of stocks which were lower than the number of stocks which were higher, so the portfolios would be bleeding. We did see a small spike in the India VIX, which is a positive because the India VIX has been so contained that it may have been pricing in some sort of complacency, and that's something that I'll be watching out for today as well. There was a big sell-off by the FIs in cash market, in stock futures, in index futures, and in index options. So cash market sell was close to 5,100 crores. In index futures, they've been net short, but they've only increased their shorts a lot more. They sold almost 3,500 crores, unwound 6,000 longs, and added 12,000 shorts. So as a result of which, the net short contract for the FIIs this time around has crossed that 1 lakh mark. So in the last 4 trading sessions itself, longs have come down from 29% to 20%, while the net short exposure has increased to 1 lakh contracts. And they've also sold 1665 crores in stock futures, like I pointed earlier. And in index options, they sold almost 3,200 crores, and they added twice the number of calls on the short side as the number of puts, telling you that on the way up, there will be a lot of supply coming in, much more than the support that we are likely to see. What is that supply likely to be at? Around 25,300 call, that's been extremely active. 25,200 call, that's been equally active as well. So between 25,300 to 25,400, we might see some sort of supply. But at lower levels, the 25,000, psychologically important, put writers are fairly active out there as well. From a technical level standpoint, the Nifty 20-day moving average will be the resistance. For the Nifty Bank, the 20-day moving average will be a support because that's where it bounced from. And for the Nifty IT index, 100-day moving average will be a support. Just watch out for Glenmark, who was one of the stocks of the day on Friday, but has entered F&O ban.
Thanks for that, Mangalam. But let's slip into a very short break. Up next, we get you details on VIP Industries stake sale. Stay tuned. Welcome back. You're watching Power Breakfast on CNBC TV 18. Well, it's a CNBC TV 18 news break confirmed as multiples PE and Mithun Sancheti come together to acquire stake in VIP Industries. Mangalam joins in with more on this. Mangalam, well, you were reporting on this on Friday. What are the details?
Well, it has actually indeed come true. It's been a deal which has been in the making for so long that it's important that it has finally happened for VIP, where the promoters have gone ahead and sold the stake to a private equity firm. Remember, in the past, promoters have alluded to them looking to sell this business because of lack of succession. But more importantly, it's one of those brands started in 1971, synonymous with the luggage industry in India, and had been struggling for the last few years. And now a deal has happened. Multiples Private Equity has gone ahead and bought 32% of the promoter's stake at around 388 rupees per share. Additionally, they've gone ahead and made an open offer as well for 26%. This is a mandatory open offer at 388 rupees per share as well. Partnering with multiples is Mithun Sacheti as well as a clutch of other investors. But more importantly, the promoters held 51.7% stake. The private equity owners have just gone ahead and bought 32%, leaving the Dilip Piramal family to have 17% stake in the company post this deal as well. For today, we expect the stock to be in the red for a couple of reasons. One, it has already rallied 75% from its 52-week low in hope of a deal. And secondly, the price itself is a lot lower than the closing price that we saw on Friday's trading session. But more importantly, once those excesses are out, maybe the street starts to ascribe a better valuation to VIP Industries given its recent underperformance and the possibility that maybe new owners could infuse a fresh lease of life in an industry which has been buzzing around ever since we had a bunch of new players come in. So for today, we expect the stock to be in the red, but thereafter, does it get re-rated or not is the question we need an answer to.
Thanks for that, Mangalam. So some red on VIP Industries today. But moving on then, HCL Tech is expected to report its Q1 earnings and the market is expecting a muted quarter. Rima is joining us with more details. Rima?
Well, after TCS sorely disappointed the street with its performance, for HCL Tech as well, we're expecting a muted quarter. Dollar revenue growth, while it's seen up 0.9%, the key number is always the constant currency revenue growth. And in the case of TCS, on account of seasonal weakness in their software business, revenues are likely to fall by a little more than 1%. Margins too, consequently, because of the revenue weakness, are likely to drop to 17.3%. That is a 60 basis points decline in margins. Profits down nearly 3%. Now, the key will be the guidance. Now, the current guidance for HCL Tech stands at 2 to 5% on revenues and 18 to 19% on margins. Some on the street believe that the company will be able to raise the lower end of the guidance, which means 2 to 5% could become 3 to 5%. But unless the upper end of the guidance is touched, that 5% mark, it's unlikely to signal, it's unlikely to be a positive signal. Margins are likely to remain healthy. Margin guidance is likely to remain unchanged. Deal wins are going to be steady, $2 to $2.5 billion. Deal wins is not the problem, but for the industry, there has been a bit of a disconnect between the deal wins and that translating into revenues. So let's see what HCL Tech throws up this time.
Thanks for that, Rima. So soft quarter is what we're expecting from HCL Tech. But let's slip into a very short break. Up next, we get you cues from the commodities market. So don't go anywhere. Welcome back. You're watching Power Breakfast on CNBC TV 18. Well, the preliminary report of the Air India crash in Ahmedabad has been made public with important highlights. Madhya is here to take us through the key points from the report. Madhya?
Well, the preliminary report has been the most awaited communication from the AIB, not just in India, but around the world. The report doesn't have the transcript of the cockpit voice recording, but it does talk about what happened in the final moments of the crash. So on the afternoon of 12th June, which is 13:38:39 seconds Indian Standard Time, the aircraft lifts off. 4 seconds later at 13:38:42 Indian Standard Time, the aircraft achieves maximum airspeed and shortly after becoming airborne, and then something catastrophic happens inside the cockpit. Within 1 second of each other, the fuel switches for both engines, engine 1 and engine 2, move from run to cut off. Now, this transition cuts off fuel supply to both engines, causing both to lose thrust. One of the pilots is heard asking the other why did he cut off. The other pilot responded that he did not do so. At 13:38:47, the RAM air turbine deploys and its hydraulic pump engines supplying emergency power. At 13:38:52, which is 10 seconds after cutoff, the fuel switch for engine 1 was moved to run, and 4 seconds later at 13:38:56, engine second's fuel switch is also reset to run. Engine 1 begins recovery while engine 2 fails to recover its core speed despite relighting at 13:39:05, which is 9 seconds after turning on the second engine. One of the pilot issues a mayday distress call. The ATC inquired about the call sign but did not get any response and observed that the aircraft crashed outside the airport boundary into the hostel building of the BJ Medical College. This sequence of events from liftoff to crash lasted just 26 seconds. That's how quickly the aircraft went from airborne to disaster.
Well, thanks for all of those details, Madiha. But moving on then, we now have Manisha Gupta joining us with all the updates from the commodity space. Good morning, Manisha. What are you watching out for today?
Morning, Mama. Thank you for that. Well, I'll start with the crude oil prices because we're looking at $70 a barrel holding. Remember, it was 2% of gains on Friday, a second weekly gain. The previous week, the crude oil prices gained up by 1.6%. So we're looking at further gains continuing into the space. Well, remember, there is an immediate supply tightness. We are into summer driving demand season. It also is about higher refinery rates. So all of that really seems to be supporting crude prices. The other thing that I'm looking at is the silver prices. Well, we have seen an all-time high in the previous week in case of silver at almost $38.50 an ounce. This is a new 13-year high that the international markets are trading at. And while on Friday we saw 4% of gains come in for silver, today in the Indian markets you might be looking at an all-time high yet again coming back. So silver and crude oil prices both buzzing in the Asian markets right now.
So silver and crude oil both doing quite well in Asian markets. But thank you so much for that, Manisha. Now, well, that's all we have on this edition of Power Breakfast. We're leaving you with the GIFT Nifty still indicating a 42-point down tick for our own Indian markets. Don't go anywhere because Bazaar Morning Call comes up next.